Hi everyone, let's run through some charts again on this market update. It is Monday around 12:50. Okay, so the day is not over, so a lot of this can change. Um, Markets have been very volatile right now. In the past week or so, 2 weeks, ever since the start of the new year, really, no one really knows what's going to happen with Europe, when rates are going to rise. Market has a lot of headwinds, but we're still in a bullish trend. And the wizards on Wall Street love to take the obvious and turn it on its head. Okay, we should obviously tighten up and pull in and sell off, and that's not entirely happening just yet. Although we do see some weakness continued in the S&P, I thought we would see continued weakness today, as well as some strength after initial weakness, and that's exactly what we got. We got a little sell-off here. The low was 2022. We may still go to 2011. That's another legitimate target. Internals are not all that strong here. RSI is under 50. The stock is in no man's land. MACD is rolling over again. That does not look so great. We are back in the cloud. The lagging indicator is below previous price action. So sideways is, again, my forecast here. Just to be prudent, I do not see a huge flush down to fill this gap at 2000, although we could get it. 1980 is, I feel, out of the question right now. But obviously, we sold off 2065 here pretty good. This is not going to be the normal V-shape recovery, down and up. We're going to have some chop. I expect the lows to hold. But obviously, caution is warranted. I'm neutral right now in the market. I am long some select biotech because it's showing a lot of relative strength. And after the market chops around, I believe it will resume something of a bull trend here, come up and test the highs again. We have a gap at 2090. Market just needs some more time to digest the bad news and figure out what the so-called authorities are going to come up with for a solution. But there's still a lot of buying interest happening. Speculative names like Twitter are holding up well. Another green day today. I sold my Twitter long today. I still expected... showing that the market still has some strength. I still expect this to go to 41 and change, but 42. It's on a pretty good upward trajectory right here. This is not something to bet against. But the market's showing a lot of selectivity right now. You're seeing some names do well, like Twitter, coming off, making higher lows, coming off that and running higher. On rumor, on speculation, whatever. Apple got hammered today, came up, change of trend candle here, and then flushed. Again, neutral in the cloud. Tough to pick a direction. But there's still a lot of speculative names holding up. IWM may very well have topped. Okay, you may see IWM come down here and just kind of hang on sideways. It cannot get over the 120 mark as much as it tries. It could come up and make a minor new high. That would not make me bullish in IWM. I would expect that to fail. It's just running out of gas here over and over again at the 120 mark. There are other sectors that are doing better. There's no reason to dabble in small caps, except maybe on the bear side. The Qs, these are weeklies. That was a weekly chart of IWM. The Qs seem to be establishing another channel here. The first one was quite steep. You can see it over here, and it failed and went sideways. But remember, sideways does not always mean the top is in. The top could be in, but there's still a chance that the bulls pick up the baton somewhere over here and turn us higher. If you look at a longer running chart here, what you'll see, the MACD is pretty interesting here. You get a high of 340, 324, 323. It's making lower highs here. This is a bearish divergence. The price is going up. The values are falling down, yet the index is not really pulling back as much as this indicator would suggest it should. Now the MACD is a lousy indicator, and these divergences can last for a long time, which is why you don't bet with the MACD. But it's something to keep an eye on. And a big pullback would be set up with these lower highs continuing to occur. And let's say this line here, the MACD line, turns up, falls down, turns up. It can make a lower high, again, below 323, and yet price can blast off. Okay, so go up to 109, 112, 110, whatever. Okay, well, this is making yet another lower high somewhere over here. When that happens, I have no idea, but just understand that this could continue lower and price can stubbornly hang in there. And then when the price turns up again, as it always will, even in a bear trend, and this makes a lower high, price can really take off and get ahead of itself on the squeeze, and you can be right and bearish and still lose. So I'm not going to bet with this. I am keeping an eye on this indicator. I do think we're going to stay solidly in this upward channel here. We could come down a bit more. We're taking out this hammer, but it's only Monday, so understand that this week can turn around. We can come back up here to 104. The Qs have been generally pretty strong, but the S&P has been the one leading. We didn't look at a weekly of the S&P. Again, the week just started, so this is a weekly MACD crossover. That's pretty bearish. The stock looks like it's coming down, but the RSI is curling up. So we have a lot of indicators saying we're going to go sideways and not really make any major crashes just yet. I wouldn't be surprised if we came down and tested the lows, but right now the market's fading off strength, but I don't see anything that says we're gonna get crushed. I don't see 1950 breaking. We could fall that far, but I don't see it happening right now. Again, select names are holding up. TLT, this is bad. Huge bullish engulfing candle here, and then more strength on top of that. A lot of call option action just came into TLT, so this could make another high, which would pressure SPX, pressure the broader markets. I don't like the way this looks. This is very bad. But again, this is very extended. So we could come up, fail to make a new high, and come down again. When TLT reverses, and it will reverse at some point, there's some gaps down here to fill. So it's tough to take a long here, although this is ultra strong. I wouldn't bet against it, but it is ultra strong. This is starting to get a little euphoric, a little ultra bullish. So just based on ultra bullish sentiment, I would think this would snap back at some point and hurt everyone leaning in one direction. That's what tends to happen, so keep an eye on that. The VIX, this is a daily of the VIX, and as you can see, the VIX is really hanging in there. This is not your 2014 VIX. Came down to 16. Everyone said it was dead again. Blasted off again. As I said, buy the dips in the VIX, and you'll do just fine. Up 10% today. The only thing I don't like about the VIX is that it shows how panicky people are. When we have a dip in the S&P, and this is just a dip. I mean, we're down 0.7% today. That's nothing. That's really not anything special. Like I said, a little concerning so far, but it's not panic. Every time we have a little dip, every time the futures dip, you can see traders on Twitter, you can see articles on the internet, everyone's saying, uh-oh, gonna make new lows, selling off, get short, the rally's dead, VIX pops, 10%, 20%, and it's everyone gets too bearish too fast. The world hasn't fallen apart yet, and until it does, they can put Humpty Dumpty back together again, and the market can say everything's fine and blast off. We're still in a very, very liquid global environment. Even if the Fed's not talking about printing more, other countries are printing, and the central banks are still very loose on policy. So, got some big sell tails here in the VIX. It's tough to ride the VIX any more than a couple of days. Everybody plows into it on the least little sign of trouble. That's what I don't like about it. Guild looks fine here, hovering right about the 50-day, putting a little bull flag, it looks like. As I said, I got in my guild too soon, but you can always re-enter positions. If you like a position and it pops, take the money and run, okay, and then see what it does. Yeah, you can miss out. This is the market in which you should not be afraid of missing out. Okay, miss out. Miss out on more upside or trade small. If you're going to trade a little bigger, I don't like to trade small and everything. Just be prepared to miss out. I was a little overweight in guild. I got out because I had a great profit. Fine. You know, if that's what happens, that's what happens. You miss out, you miss out. Now it's hovering, it's hanging in there. I might take another long. Biotechs look strong. They're the strongest sector, and they can pop. When the broad markets turn around again, even if just for a counter trend rally, I expect biotech to be the winner. IBB is in this tight little formation. MACD's curling up. It's still in a buy signal. This looks good to me. This looks like a little high tight flag. This could pop. I saw someone talking about shorting biotechs today. Go right ahead. I wouldn't encourage it. Biotechs can make a nasty reversal, but the price action doesn't suggest that at this point. I don't have the RSI on this, but I'd be shocked if it was too far under 50. Okay, I added it in the wrong place, but yeah, it's over 50. Take that. We gotta change it to 14. Oh, and it's under 50, but not by much. If you add 14, let's add it below so we can get a better look at it. There it is. Right around 50. No panic. Stotch is rising, MACD's rising, and the price action is, I mean, put your charts on a line sometimes, and you'll see what I'm talking about. Okay, the swings were pretty wild on the candles, but when you go to a line, where is the sell-off here? I mean, we can come up and really slam down to 308. Don't get me wrong, we can, which is why I've gone out 2 and 3 months on my calls. But this is pretty tight action, generally speaking. The past, say 1, 2, 3, 4 days, 4 or 5 days or so, 3 days. This can continue to zigzag, and the trend is up, so I expect it to pop. I'm just following the trend here. ACT, I like it. I added to it today. It's over yesterday's high, hovering right around there. It really popped. It was too stretched. It came in, but it's trending higher. Lagging span here is above previous action. MACD's crossed. I didn't check the RSI. I think that's hanging in there as well. Just looks like a winner. I don't see anything bearish here. It looks like it's going to pop. I expect it to go sideways with everything else for a few more days. Maybe come in a little bit more. Can fill this gap at 268. But it looks like it's coiling. Again, go to a line because it's the close that matters. Forget about intraday. It's the close. And the line is showing you the close, which is why I like going to a line here, because the candles can really be misleading. I don't see anything bearish here. The moving averages are all rising. It looks like it's going to come in again, and at some point here, pop. 280, 290, maybe even 300 in the next 30 days. That's what I see. Celgene, again, came down, popped up. Great comments from the CEO. They're going to beat profits. FireEye, just a monster here. Strength begets strength. Buy strength in this market. This is not a market for beaten down, highly shorted names to squeeze. That can happen, but that's not how I'm playing it. The market looks way too dangerous to me to play spec names to the long side when they could get killed. Biotech, these are highly profitable companies. Their charts are strong. They're breaking out on volume. Good buy volume here. Great buy. This candle was wonderful. This candle was your sign to get in long right here. I just don't see any reason to short these names or to not play them to the long side. If you want to play something long, play the strength. This broke out of a wedge. Great follow through. There's nothing to dislike about this. I'm not playing SPY right now. If I did play SPY, it would be after it's oversold and stretched and the rubber band says it's going to snap back to the upside. Still in a bull trend. There's a lot of bearishness creeping into the market, and the thing to remember about Wall Street is that yes, the market can plunge at any moment, but stocks are the last to get it, okay? Stocks are the last to get it. Bonds are soaring, gold's soaring. These are all extremely bearish developments for stocks. So why do you see biotech names like this blasting off? Because they're still making very good money, very good profits, expanding profit margins, and where interest rates are at zero. When interest rates are at zero, the real interest rate, not the nominal, the real rate is literally negative because we're still printing money. We're rolling off our bond purchases, our prepayments in bonds, and interest into bonds into new purchases. So we're still printing, but we're just not printing as much. So you still have a real negative interest rate, okay? The real fundamentals still matter here. You've got a real negative interest rate, and these corporations are making great profit margins, expanding profit margins. So multiples can still expand, and these stock prices can still go a lot higher. Okay, IBB, I've talked about it a lot. Go look at the candlesticks on the weekly, on the monthly, and it's super strong. There's nothing bearish here. This is a strong uptrend. This is the type of uptrend that finally finishes in one of these 10, 20% up moves. Go look at the quarterly, the monthly. It's a monster. It's super strong here. Come in, came up, tightened, consolidated, gave some back, and now we're just up, consolidate, up, consolidate, up, consolidate, up, consolidate. I expect a big candle here, 360, 400 or something. The final blow off that fails is usually what you see here. I'm not shorting this. That's a way to lose money. You want to lose money, go short biotech. You'll be right eventually. Probably your fifth short will make you money, and you'll be lucky if you get back even on all the money you lost the first 4 times. So don't do it. I'm buying strength here, and that's biotech. This is horrible. This is horrible looking for stocks. This is just ultra strong action in ultra safe bonds. But stocks right now are hanging in there. So when bonds come back in, you could see stocks pop again. I think the rally, like everybody else, I think the rally's getting long in the tooth, and that we're really eventually going to have a nasty crash one of these days. But Wall Street really loves to drag it out. Okay, they really, really love to drag this stuff out. They make money off the bears. That's their game. That's what they do. That's their business. And don't be someone that gives them your money. Okay, they're here to take advantage of the suckers. Even if the suckers are right on a fundamental basis, it doesn't matter until it does. Okay, so I expect to see a lot more chop and some nasty action up and down. But remember, the nasty action goes up as well as down. So we're starting to have some nasty down days, but until it breaks key levels, it's hard to get too bearish. I'm not ultra bullish, but I just can't get bearish here. I expect the lows to hold. I expect new lows to reverse. And until Wall Street proves me wrong, until the market proves me wrong, that's how I'm going to play it. I expect the real weakness to come after, say, about March. April, May, especially May. They say sell in May and go away, and I think you're going to see that this year. You're going to see a sideways market. We'll make a new high, come down. You'll see a sideways market, and then in July, August, September, when all the bears are exhausted and played out, and bearishness is at low levels again, and complacency has creeped in again, and the bulls are feeling invincible, I think you'll see 20% come off the top of this market like it was nothing. When? I really can't. I'm speculating. I really don't know when. August and September are classically really bearish months for the market. Okay, that's when everyone's in the mood to sell. That's when money managers look to sell. That's when the Europeans are on vacation. That's when, for whatever reason, everyone is expecting some weakness, and they tend to sell weakness instead of buying it. Early in the year, for whatever reason, everyone's thinking weakness is an opportunity. All right, the best traders I follow are all saying the same thing. You know, what do I want to buy? What am I looking to buy? These guys are not looking to short pops. And they don't lose money. They're professional traders. They make good money long term. I've been following for years, and I don't trade against them. They're not gods. It's not like they're never wrong, but when you trade against them, you tend to lose money. I was short gold. One of these guys was long gold. He won. I lost. So I tend not to go against these guys, and they're not shorting. Okay, they're not shorting. Look at gold. It looks good. It looks strong. I'm sad to say. I think we're going to go hit 119, and I think that's going to be a top of sorts. We can go a bit higher, but really all this is still nothing more than a counter trend rally. This is a bull counter trend and a bear downtrend. Okay, we got some nasty lower highs here. 129, 126. We didn't see 126 at all after that. 124, wham, right down to 114. 10 points like it was nothing. Little counter trend, crushed again. This was really gappy and sloppy and loose. So it had counter trend written all over it, and that's what we got. Again, the bulls stepped in, squeezed the bears because they saw an opportunity. But this is subdued price action. Yeah, it's wild, but it's subdued. We haven't even taken out this last high at 120. We got close. It didn't work. We're taking another run at it. This can come up and test that level. Make sure it doesn't fail as well. We got another gap here, 115. We got gaps all over this thing. Another one of 114, another one of 112, another one of 109. You know how I feel about gold. So deflation is hitting everything, and it tends to hit the metals as well. And it will catch up with stocks, because I don't believe the world's central bankers are printing enough to keep the stock bubble afloat. Okay? To keep a bubble afloat, you need constant amounts of new buying. You need ever-increasing amounts of new buying, new buyers, new purchasers. Because everyone, all the banks, all the speculators are buying and flipping. Okay, buying and flipping. Buying and selling to the next guy. 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 This is how they're making money. Okay? There's a narrow amount of people expecting to sell to somebody new. When you run out of new people, this is, by the way, by definition, a Ponzi scheme. I'm sad to say. When you run out of new people, when there are no more buyers, the stock prices can't meet the bid. The bid can't be met. When they buy at 2029 and put a bid out there for someone to buy it from them at 2047, what they're selling, they put out a bid, hey, I'm offering SPX at 2047 because I bought at 2029 and I'm going to make some money. And there's no buyer, there's nobody bid. No one hits the bid, it falls. No one hits the bid, it falls. No one hits the bid, it falls. Okay, price is looking for a buyer. When we run out of buyers, we're going to be in big trouble. I just don't see it quite yet. The central bankers are holding us together with scotch tape and string, but we're okay so far. We can fall down some more, but the moving averages are still rising. The moving averages are kind of our savior here. The action's wild, but not yet crazy bullish, crazy bearish. If it was ultra bearish, we would see Twitter fall apart. We would see no action in Apple. We would see a lot of high-spec names. FireEye would be at 18. Not 35. What this is right here, wow, what a day. This thing's been a monster. What this is right here is rotation. Okay, we're seeing rotation. People are dumping Apple. They're dumping their Tesla. Twitter, not yet. Facebook, not yet. I don't have Facebook up here. There we go. But many of the old darlings are getting hit, are selling off. People are swapping their old darlings for new darlings. Okay? Who are the new darlings? Well, who's up 5% in a down day? You know, FireEye. Monster move. BIOTECH. Look at Celgene. Up 2.7%. The indices are down today. The indices are down today. Okay? The general indices are red. But this is up 3 points. ACT has come way in, but it's still green. Um, Biotech, I believe, is up on the day. The index is up 2 points, even though everything else is red. Um, so when the leaders start getting hit, when there's no new rotation, it's time to worry. I think biotech's going to be the last to get hit, but we are seeing some of the old darlings die. That's a warning sign. That's definitely a warning sign. I would not play the old names to the long side, except for a bounce. They're getting hit. We go look at old buddy Tesla. I don't even have it up. Okay, I'm not even following this because I want to play long in a bull trend, and this is not playing along. This is getting hit. You could play this to the downside if you wanted to with puts, but again, I don't want to see a nasty reversal in my face when I'm playing the downside. I just don't do well in that type of environment. That's me personally. For yourself, play it however you want. But I'm looking for the new leaders and things that are failing, things that are not keeping up with the markets, not green on a red day. I'm getting rid of them. I'm not following them. I want no action. I want no part of them. I'm an ACAD. Great day. I'm big in ACT. And when look at it intraday, it got crushed. Look at this. This is a 5-minute chart. It came in, boom, got hammered, right? Hammered again. I'm not panicking here. I'm long. Why would I panic? I'm not worried at all. Why would I? It's still green in a red tape. It could come in and fill that gap, but it's still in an ascending trend line. It's a little shakeout, popped, shook out everybody. It's going to find support somewhere here and probably resume its uptrend. I have calls for next month. If you want to play long and sit tight, pick names that look great. I'm going to follow ACAD probably a little higher. I don't know. We'll see. And take my profits. But you have a lot of opportunity to take profit in strong names that are beating the markets. All right? So look for it that way if that's how you want to trade it. That's how I trade it. I'm mad at myself for not buying Celgene down at 112. Now it looks great. But whatever. You can always get in again. Remember, you can always reset. Find the strong names and buy them when they're weak. Because it's working. That works. Look, down here, it's weak, but it's above the cloud. Looks okay. It comes back up again. That would be my advice. So check it out. We'll come back again. Check out the market in a couple of days.